Hello. Thank you for joining us today. I am Jessica, and this is the lovely John Kirksick. We are with Medicare Mapped. You can find us on Facebook primarily, so make sure you pop on Facebook and look for Medicare Mapped for right now, and you'll find lots of goodies there about Medicare and how to make things better. Today, we are talking about how to lower your Medicare costs, and Mr. John, as always, has the best solution. So take it away, sir.
Well, good morning. Good morning, Jess. Good to see you. We start out every time with a rant. Are you ready for my
Yes.
rant? ACA.
Mm.
Yeah, I know, right? Good rant. There was some changes this year. Our dear President Biden gave us additional credit or additional help. $50 to $85, kind of the number they're kicking around per person. Rant for the day. I have heard, this is completely rumor-based, but I have heard that the ACA is now automatically adding your credit even if you have chose not to.
That is a fact. I can confirm. I got the letter in the mail that they did that to ours.
Yep. I've had several people contact me. So even if, so that can become a problem. I had a gentleman that's self-employed. He's going to make more money this year. And he's like, you know what? I'm just going to leave my payment alone. That way I don't have to worry about it at the end of the year, paying back anything. So yeah, sticking your hand in the pie, people, may not be the best answer. Just throwing that out there to the ACA. There are individuals that did not want to touch it just because you gave it to them. So anyway, yeah, rant for the day. Don't put your hands in the pie. But anyway, story kind of going off the base of what we're going to talk about a little bit today. I had a gentleman who's been employed for quite a few years now. He's well over his 65 number. He's starting to look at maybe not doing his employer insurance and maybe doing the AC or maybe the ACA, maybe doing Medicare. Yeah. So that's kind of what he's contemplating. And he brought up a topic. We often talk about Part A, Part B on Medicare. Most people are aware that A is typically free. Do you know why it's only typically free?
No, of course I don't know. That's why we're here.
So it's typically free based upon quarters that you worked or your spouse worked to obtain Social Security. So it's 40 quarters, or like I like to say, 10 years, right? So 10 years will get you that free. And a lot of times based upon if you immigrated to the United States, you may not have worked enough for that either, right? Or you may have been disabled and not worked enough. So there's several different things that may have caused A to have cost. But typically, it's free. B, on the other hand, is not free. And that's where the dilemma comes. So this gentleman was talking to me. He said, my insurance agent, not the friend that's talking to me, but his friend, right? So he said,
this gentleman's telling you this story.
Yeah.
Okay.
So this is a third person story. Remember, we said that last time. Sometimes my stories are not my stories.
But today we're gonna.
Yeah. So anyway, he said that he was having a discussion with him, and he said, my insurance agent did not make me aware of this additional cost. And I'm like, additional cost? The plan costs what the plan costs. And all of a sudden it hit me. He was referring to his Part D or Part B cost. B as in Bravo. And he obviously had made more money. So Part B is based upon how much money you make.
Income.
So a lot of times we get confused thinking the insurance agent didn't tell us something, or someone didn't make us aware of it, or they're throwing in this extra cost just
for fun.
Right? And so it's based off of your income. So the numbers that the majority of Americans deal with and that I'm very comfortable with is $88,000 for an individual for 2021 or $176,000 for a couple.
Is that gross income? Is that net income? Is that adjusted gross income?
That's gross income.
That's gross. Okay, and that's what's going to impact your Part B.
Correct.
Okay.
Correct. So in this situation, not quite sure why his is higher. I had a client once that upon turning 64, they decided they were going to take their 401k and completely pull it out and cash it out.
Mm.
Yeah. By doing so, they now made well over the 88,000. And so they're Part B. In fact, I have to get the phone out, right? Because there's different numbers. So if I look away for a second, know that this is why. So I'm looking at the numbers to tell you what they are. So the higher numbers are up to 111,000. So from 88 to 111, or from 176 to 222. That gets you $207 a month.
And that's your premium for Part B, correct?
Correct.
Okay.
Correct.
So if you go over that 200 mark, or 222.
Yeah, 222. Yeah.
Go over 222, I am guessing it gets ugly and there's no federal assistance. Fair statement?
No, there actually is. So if we go over 222, we then go from 222 to 276 for a couple, or from the 111 to 138 for an individual. So that's the next one. Then it goes to 297.
Okay. What's our top end?
Well, our top end, I have to scroll down. There's several more. So the top end is above $500,000 for an individual, or above $750,000, so 750,000 for a couple.
Okay. So the trick then is making sure that your gross income stays at a certain level so that you don't end up paying more for Part B. You need to think about some of these choices before you find out the hard way. Is that a fair assessment?
Yeah, but they get you coming and going, though.
Oh, okay. So here I was hopeful.
I know. That's why this is such a tricky comment on this.
Right.
And it takes so many different people to be aware of what's going on.
Right.
You have to have a financial advisor. You have to have an account. You need to have an agent of some kind in your corner that's helping you with this. And they all have to kind of try to figure out what may be in your best interest. Because the other thing that happens is your Social Security is based off of the last few years of your work. And I'm not a CPA or an advisor. I believe it's I think it's 5 years. Your last 5 years of work is how much you get in Social Security.
So they're taking the last 5 years, they're averaging that.
Yep.
And that's the amount they pay you. So that's really an interesting concept and an interesting way to calculate what Social Security would potentially pay you.
Correct. So again, that's not, I don't specialize in that. I'd highly recommend you finding an advisor.
Sure, but that's another factor you need to make sure you have figured out before you start jumping onto Part B and then find out the hard way that you're paying more than you need to be paying.
Correct.
Sure.
And they review that over a couple of years of time. So you may be better served to pay a higher Part B for a couple of years because you've gotten more from your Social Security amount, right? And then have those numbers drop. But you need to be aware you're going to pay more on Part B based upon your income. And so that top number for this year was $412 a month. So it's anywhere from 148.50 to 412. That's what.
And if you're on a fixed income, that's a pretty considerable swing if that's what you got to watch for.
Yeah, so let's tell that story because that's where I was at. So someone pulled their 401k, right?
Yeah.
And again, probably not having a financial advisor, probably not talking to a CPA because they pulled it out at 64. So what happens to your 401k if you pull it out at 64? Don't know. Yeah.
Penalty.
Yep. Penalties, right? So penalty, taxes, and now we get a higher amount on our Part B. So this individual was getting about, if I remember right, about $900 a month on Social Security. And their Part B was almost up at that $400 a month mark. So instead of having $900 a month to live off of now we're down to $500. So yeah, sometimes it's very hard to know what to do unless you're getting people to assist you, right? Sure. And some of those people, like a CPA, obviously there's costs involved in a CPA. But I'm not sure most people understand that most financial advisors and most insurance agents are being paid like a real estate agent, right?
Right.
So them giving you service is not costing you anything. That their service is free to you. Their advice is free to you. They're actually being compensated by different, insurance companies or different financial groups that they're helping you with.
Yeah.
And so I think a lot of people misunderstand what they should be doing with those particular individuals when it comes to asking for assistance. So, moral of the story for the day, make sure.
Just ask.
Yeah, make sure you're asking, right? Make sure that you know what is in your best interest when it comes to Part B. And we're going to go a little more, into those topics as we go along, because in this particular example, the gentleman is going to pay maybe about $80 more a month to have a Medicare Advantage plan that he's picked. And he's already said, yeah, that's the plan I want, and to pay for Part B over his employer insurance. So $80 difference a month.
Yeah.
But now he gets to figure out which insurance company he wants to work with, which ones take his doctors, which ones offer him the best deal on his prescriptions, and not his employer.
Rather than the employer. Sure.
Also, he had a rather high deductible from the employer, and on the Advantage plan he picked, there wasn't a deductible.
It's awesome.
So we often think that the employer has our best interest in heart, and unfortunately, there's so many different people employed with them, right? They kind of have to blanket it, and that doesn't necessarily work. So in this situation, gentleman definitely is moving towards getting his Part B put into place now. He's had A for years, but now he's going to put Part B in place, and he's going to add a Medicare Advantage plan. So, more of the story is, look, be aware of what is out there for you and available, and take advantage of those services that people offer, and don't be scared to.
For sure.
To look, right?
For sure. I would say most of us would much prefer that you come and ask a question that you might think is stupid and save yourself lots of headache versus finding out the hard way from something that could have been super easily prevented.
Yep. So, well, there we go for the day. As I always say from Mark Twain, never be afraid of what makes you smile.
and Medicare mistakes, unnecessary ones, that's not it. So don't do that. Those don't make us smile.
So
awesome.
Have a great day. We'll talk soon.
Thank you. Again, find us on Facebook at Medicare Mapped, and you will find lots of goodness there. Thanks so much.